Important note, this video is not financial advice. Always do your own research before making any investment decision. Past performance does not guarantee future results. Here's your market briefing from Rumour with AI. Equities and digital assets are rallying on a convergence of monetary easing hopes and regulatory clarity. The Dow Jones Industrial Average has surged past the 70,000 mark for the first time in history. This milestone is driven by falling inflation expectations and intensifying speculation that the Federal Reserve will cut interest rates sooner than anticipated. Investors are pricing in a softer macro environment, shifting capital from defensive positions to growth-oriented assets. In the digital asset space, Chainlink is capturing significant attention. Link has jumped 8.2% to trade at $9.47. This move is not speculative noise, it is backed by fundamental data. Daily spot volume has risen 115%, while derivatives turnover has climbed 140%. This surge signals intense institutional interest and liquidity inflows into the Oracle network, suggesting that market participants are positioning for increased on-chain activity. Meanwhile, the political landscape is reshaping the regulatory framework for these assets. President Trump convened Web3, AI, and traditional finance executives at the White House today. The summit aims to shape crypto regulation and secure dollar supremacy ahead of the critical Clarity Act vote. This high-level engagement indicates a strategic pivot toward integrating digital assets into the broader financial system, rather than isolating them. However, regulatory friction remains a key risk factor. A U.S. Court of International Trade ruling has upheld the elimination of the de minimis tariff exemption for imports under $800. This decision directly impacts cross-border e-commerce, potentially increasing costs for small businesses and altering supply chain dynamics for consumer goods. Simultaneously, JPMorgan has ended direct banking ties with prediction market platform Polymarket. While JPMorgan retains its IPO underwriting interest, this move highlights ongoing valuation disputes and regulatory caution within the prediction market sector. Looking ahead to today's release, the economic calendar is notably quiet. There are no major high-impact releases scheduled for the next 36 hours. This absence of data allows markets to digest the recent policy shifts and equity gains without immediate volatility triggers. Traders are likely to monitor volume patterns in Chainlink and broader equity flows as proxies for sentiment, rather than waiting for economic reports. The interplay between rate cut hopes, regulatory summits, and tariff rulings creates a complex backdrop. The Dow's break of 70,000 reflects optimism, but the JPMorgan Polymarket split and tariff changes remind investors that structural risks persist. Chainlink's volume surge suggests that capital is seeking yield in infrastructure plays amid this uncertainty. As the week progresses, the focus will remain on the Clarity Act vote and any further commentary from Federal Reserve officials. The quiet economic calendar provides a window for these narratives to solidify before the next wave of data arrives. Investors should watch for follow-through in derivatives markets, particularly in Chainlink, as a barometer for sustained risk appetite. That's your market briefing. Follow Rumour with AI for daily market intelligence.